2, 1.
Hello, everyone, and welcome to How Tax Automation Helps Firms Budget for the Long and Short Term. This webcast is brought to you by CPA Practice Advisor Magazine and SafeSend. Okay, I think I got kicked off and I believe I'm back on the air. Is that correct?
I'm here, Gail. I was at 2, disconnected.
Okay. Yeah, that was weird. All right, this is intro take 2. Welcome, everyone, to How Tax Automation Helps Firms Budget for the Short and Long Term. This webcast is brought to you by CPA Practice Advisor Magazine and SafeSend. I'm Gail Perry, Editor-in-Chief of CPA Practice Advisor, and I will be your moderator today. Before we get started, I'd like to explain how CPE for this webcast works. The webcast qualifies for 1 credit of continuing professional education. If you plan to earn CPE for attending this session, you must stay with us for at least 50 minutes. In addition, we're going to display 7 polling questions during this event. You'll need to record an answer for at least 3 of the questions, as this is our verification that you are still watching. Later today, you'll receive an email from CPA Practice Advisor that contains a link to your CPE certificate, assuming you met the requirements for CPE. Please note that we can give CPE credit for multiple people watching on the same computer. So if there are others in your office who would like to attend this event at the same computer, please have them join you now. And at the end of the event, we'll provide an opportunity for you to send us their email addresses so they too can receive CPE credit. At any time, you can enter your questions in the Ask a Question box provided on your screen, and our speakers will try to get to as many questions as possible during this presentation. Questions not answered during this live webinar will be addressed by the speakers afterwards via email. The slides are available for download. You can click the Event Resources option on the bottom left side of your screen, and that will display a PDF file that you can download that contains today's slides. Also, the archived version of this presentation will appear on the CPA Practice Advisor website after the event ends. Note that CPE credit is not available for watching the archived version. Okay, today we're joined by Matthew Stevenson, CEO of SafeSend, and Andrew Hatfield, co-founder and chief growth officer at SafeSend. And now we are ready to begin.
Great. Thanks, Gail. Great to see you again, as always. We ran into each other at AICPA again this year, Engage, and great to see you again and great to be on here. Thank you for having us. Today's webcast is sponsored by SafeSend, which is important to point out is now a part of Thomson Reuters after the acquisition in January 2025 of this year. Your webcast today is going to cover how tax automation helps firms budget for the short and long term. As Gail pointed out, that is a CPE webcast, so she did the housekeeping on that. Just make sure to answer polling questions, make sure that you make it through 50 minutes at least today, not the full hour. And along the way, we're going to encourage you to chat questions. Matter of fact, we've got staff here that will be answering those questions live. And then Matthew and I will also be taking those questions as we see them come in. If there's questions that relate to the entire audience, we think it would just be really valuable and beneficial to go ahead and answer those live as well. So just encourage you to ask questions now as we go through the content. Please feel free to do so. I think that it's just more valuable when you get audience participation and we can get some answers to questions that you may have. So today's agenda is pretty straightforward. We're going to cover 5 items, starting with the evolution of automation in the industry. We'll talk a little bit about that history and over the last 15, 20 years, where we started, where we are. I'll talk a little bit about the SafeSend history and why we decided to build a software company around automating the tax process in particular and what was going on back in 2008 when we decided to do that, which will help us get to the present and where we are today and the decisions that may be in front of your firm. Matthew's going to focus in on the budget impact of tax automation and then what to look for in a vendor. It's not enough just to choose technology. You have to actually have a plan in place and a set plan to do that. And then what should you be asking the vendors that you're looking at, and how should they be answering those questions? And then we'll go over some of the common misconceptions. We'll get into some more detail about what that means as we go through the presentation today. And then what you need to do as a firm. So I always like to have some takeaways. What do you need to do as a firm to move forward on tax automation through the lens of budget? So that's the agenda today. We'll start off, though, with introductions. I'm Andrew Hatfield, as Gail mentioned in the beginning. I'm a co-founder of SafeSend and currently the Chief Growth Officer. That puts me about 25 plus years in the tax and accounting space. So sometimes I look at that and wonder, where all that time went, but here we are. And I've kind of led the automation growth of SafeSend since 2008 until today. So we'll tell you a little bit about that history and what our thought process was and what we saw as the problems and what the solutions for firms are and where we are today. And then I'd also like to introduce Matthew Stevenson. Matthew, maybe you want to give the audience just a brief high-level overview of yourself.
Yeah, great to meet everyone, and thank you for joining and having us. So Matthew Stevenson, I've been with SafeSend the last couple of years, partnering with Andrew and Steve, obviously on, I think, what has been a really fun evolution and adventure at SafeSend. And then, I've spent a couple of different stints in the industry, along with Avantax, and then also working with one of the big four many years ago. Excited to talk about how we think about automation in the context of budgeting and answer sort of any questions you have that we can be helpful along the way.
All right, well, let's get into it, Matthew. So we have a few slides. This just gives a few metric data points about SafeSend. I think what the takeaway on the next few slides ought to be is that we're going to talk a little bit about SafeSend history. We do that not to promote SafeSend to everybody in the audience, but I do that more so to just explain what SafeSend saw as some of the problems around tax automation going back to 2008, why we decided to start SafeSend to solve some of these problems, and sort of what tax automation means, and what other companies and what other logos are participating in that, and just give you a little history behind it to bring us up to speed to current state today, post-pandemic, and talk about the substantive content in the presentation today. But the takeaway on this screen, you can read the screen, but there's a few things here that I think are really important. Back in 2008, there weren't, and a lot of you on the call probably remember these days, heavy paper-based. Everything was very manual. You still had some of the problems today, like staff shortages and things of that nature. Outsourcing was kind of emerging onto the scene. Firms were buying scanners. They were buying document management systems. Some firms were getting into portals. There was just this big shift between paper to digital. The software products that were available at that time were mostly on-premise, meaning they ran inside of your firm. And there's been a big shift over the last 15, 17 years getting into cloud solutions. And I think things were just a little more manual than digital back then. And look, this was not only difficult for a firm, but it was also pretty difficult for your clients. We're talking about the process in tax automation, from gathering documents to prepare the returns, to preparing the returns, to getting the finalized tax return out to your client, things like 8879 sign and back. And then you've got engagement letters and organizers and extensions and all the stuff that flows through there. And what I noticed in 2008 is that there weren't a lot of companies. Now, there were the tax vendors and other companies that were focused around the preparation stage, outsourcing, document management systems, portals, but there really wasn't anybody automating the front or back end of the tax process, the gathering side or the delivery of the returns. And I noticed a lot of companies that were promoting products weren't extremely heavy into the R&D side. And when we started SafeSend in 2008, we wanted to attack the automation around the tax return process, particularly in the delivery area, what we term the last mile. But we decided that we were going to be a very centric R&D based company. And even today, what I'm proud of in this stat is that 66% of the employees here at SafeSend are in R&D. That's why we're able to deliver products out into the market at a fast pace and continue into a multi-product environment. We have about 4,000 customers, 75% of the top 100. Pretty good, growth here. You can see at 45%. But the main takeaway on this slide is I think a lot of companies have kept pace to become more R&D centric now. I think that's really good for firms out there in the industry. Going from 2008, where there weren't a lot of options to automate your tax process, there just weren't enough logos out there as software vendors, to today, where you're kind of getting this rapid entry point from companies with the uplift of AI and a more focus around R&D. So SafeSend's evolved significantly over time. And the point on this slide is that we've moved with the market. So back in 2008, we released products like electronic signature product, a secure file transfer product, TickTime Calculate. Some of you may still use that and remember that product, just a plug-in to Adobe Acrobat so that you could have the same tools that as a tax preparer you had on your desk, but in a digital environment. So as work papers went into PDF, you lost things like calculator, rulers to go up and down the pages, red, blue, and green tick marks, just little simple things like that when we went from that paper to digital shift. So that's what TickTime Calculate was about. But that gives you a pretty good idea of where we were at back in 2008. And then kind of fast forward, 2016, we released SafeSend Returns, which was an automation on assembly, delivery, and e-sign for tax returns. 2021, we went through the pandemic. People in your office went home. Your clients went home. Everything became more remote. We had to build things like digital organizers, electronic signatures. We really had to step up that environment as it became more prevalent across many more documents and workflows and situations. We had to digitize the extension process. 2022, we really got deeply involved in API connections, role-based access controls, which are really important for the larger segment of firms, and then really dug into, and what I think is really important and what I think firms are benefiting from today, not just from SafeSend, but products as a whole, is integration. The relationship between your software vendors and the other portfolio products you use in your firm, from like Intuit or CCH, or it could be Drake, or it could be Thomson Reuters. You really have to have vendors within your automation technology stack that interact with the key portfolio products that you're using already. I mean, your tax compliance system, for one, would be an example, but in your technology stack, there's things that you just have to have, and you want all of these other programs to play nice. And the world's kind of shifted to where software vendors work more freely together. You should be searching for those companies that do that. Really important today, and it's basically a standard for the good software businesses out there. And then in 2024, AI has really kind of come onto the scene. As you can see, there's a lot of new products in the market. I couldn't believe how many new products were in some of the categories at some of the shows that I've been to this past year. That is a real uplift from AI. SafeSend's no different. We were finally able to release our solution to solve the gathering problem on the front end of the tax process. How do you get all of those documents you need from your client to prepare the returns? How do you get those in an easy manner that doesn't frustrate your clients? And then how do you take those documents and identify them without having to manually do that and match them up? And then how do you get data out of those documents and flow it into your preparation stage? And so SafeSend Gather AI has been our solution to that. There have been a number of other companies in the market that have entered that space, and that's because of AI. Matter of fact, back in 2008, we looked at solving the front-end gather problem, because it's still been a big problem for a number of years, getting all the things you need from your clients to prepare the returns. But OCR was the technology. If you remember optical character recognition back then, it wasn't all that accurate at the time, and it just didn't serve the accuracy need that problem had to have to get solved. And so now the good news is, if you haven't implemented a solution on that front end of your tax process for Gather, there's a number of great companies out there that have entered that space. products are all, including ours, are all early, so they haven't been in existence for a long curve, but they're all pretty good as far as the accuracy that I see. We're getting great remarks back on ours, and I think there's a lot of options, and going forward, those will just get better. So anyway, there's been a lot that has changed in the last 17 years since 2008 when SafeSend was founded, but I think the biggest push has been pandemic forward, and especially around the implementation of AI. So we've seen significant growth over that time. This represents the number of returns that go through the SafeSend system from 2017 through the last season of 2024. This represents those returns in the millions, and so you can see the growth. What this tells me is this isn't, hey, look at how many returns SafeSend is processing. This slide tells me, look at the way that the market is moving and the way that the industry and particularly your clients are moving. So I'm sure any firm on the call today in the audience, you're doing a lot more digital delivery of tax return packages to your clients than you ever have in the past, whether that's through email attachments still, or a secure file transfer system, or a portal, or some of the dozens of different delivery systems out there, including SafeSend. The footprint of electronic in that area has significantly increased post-pandemic. It's an absolute necessity today, and you can see by our trajectory how many more returns are going through our system. That just mirrors the market. And I got to tell you, today, it's all about the client experience. If your client can't have a good interaction with the tax return process when you're delivering it electronically, and they're calling your firm and they have questions about it, or they're frustrated, or you've got too many different ways that you're trying to ask the clients to collaborate with documents. Maybe you're sending something through e-sign, like an 8879. Maybe you're sending the tax return through something different, like your portal. Maybe you're sending the engagement letters somehow through a different technology. Maybe just emailing it. Maybe it's online. Maybe you're sending the organizer still in paper. You're really confusing your clients, and that becomes difficult to get adoption. And if you don't have a good technology with a good client experience that's standardized, you're going to have real problems getting the high adoption. And look, our clients want digital for the most part. They just do. We'll talk a little bit about that later in our misconception slide. So we say all that to get to this slide, okay? So today, SafeSend offers an end-to-end tax engagement solution. Again, I don't want to make this about SafeSend. I want to make this about what this slide represents from where we came from 2008, because that mirrors where the market has moved and where your firm should ultimately be. So this is the tax process, right? And this is kind of the automation slide. You have the first mile. So the very start of your tax process, you have to gather things. So that's engagement letters. Electronic signatures go on engagement letters, as well as 8879s. We think about it on the back end of the process during delivery, but it absolutely affects the front end as well. You have document request lists, organizers. You need a secure file transfer system to send things securely back and forth to your clients in large files back and forth. There's next-gen AI, which we just talked a little bit about, that's really having a huge uplift on the accuracy of identifying documents that come into your firm, getting those indexed properly and matched up, and then getting data moved out into the preparation phase, and keeping track of what documents your clients have delivered, what you still need to get from your clients, reminding your clients to get the documents that you don't have yet. I'm sure a lot of us are still doing that list through email. That's still probably the most prevalent way to keep track of document lists that you need for the returns across the entire industry. But next generation AI is really improving this. And I think if you don't already have a solution in place, you should at least be considering it and taking a look at it. And like I said, if you just search it, there's a number of firms that are out there doing it today. Also, custom questionnaires are part of that. And then connection. You really need to have connections and API connections from whatever vendors you're choosing on this gather end to flow into the systems that you use in your portfolio, like CCH Access or UltraTax or Go system or Intuit's Lacert. And then there's other options out there too. Outside of tax compliance, there's products like TaxCaddy, or there are payment processing systems like Stripe. Just whatever that flow is, make sure that the vendors on the front end are working with software that's inside of your portfolio. And of course, preparation is still ultimately dominated by the strategics, the tax compliance software vendors. And you have that step there. That's been something that the industry as a whole, from a software company perspective, has really hit hard for a long period of time. And in my opinion, there's a lot of good stuff there. And everybody on this call probably uses one of these vendors. There's a few others out there, but probably one of these 3 or 4. And then the last mile, this is really where SafeSend concentrated the beginning of its journey into perfecting electronic assembly and delivery and e-signatures of tax returns. There's all of these components here that you need to keep in mind. So there's tax return delivery, there's electronic signatures within tax returns when they're delivered that your clients need to sign. There's extensions, there's billing. Your clients have to pay state and federal. You have to get paid by your client. There's K-1 distribution, there's tracking and reporting. And there's, of course, the reminding of what has been done and hasn't been done by the clients, reminding them to do the things they need to do. And then there's monkey wrenches like paper filed returns, things that can't be done electronically that have to be paper filed. But you want all of this sort of going together to your client, and you want a standardized process from the beginning all the way through to the end. So from gathering to delivery, how many technologies do you want to actually touch your client? Because if it's too many different ways to do those things, your clients aren't going to have high adoption rates and they're going to get confused. I always say, you have to tell your client something 7 times before they remember it, which is really true. It's really important in training or when you're rolling out something new in your firm. But if you give them 7 different ways to do it, they're never going to be able to accomplish the task. So we're going to talk today about shrinking tech stack, and that's really important. So a couple takeaways, and then we'll move into some polling questions. Your firm should really be thinking about automation of the tax process, understanding all these different components of technology and workflows that you're going to need inside of it, and then looking at the tech stack you have today that does these tasks, looking for duplications, like to use an e-signature solution, but you already own a product that has an e-signature solution as a feature set of it. So do you need to be paying, here's your budget, right? Do you need to be paying twice for the same feature? I can't tell you how many firms that I've seen that are paying duplicate costs and have 2 software systems, and one replicates features that they're paying for in the other one. And it just doesn't make any sense. And then you really have to understand your tech stack versus what's available out there. Then you have to know the right questions to ask to the vendors. So anyway, here we are today. This is kind of what the tax automation process looks like. These are the components of it, and we'll get into some more details about it. But I think, Matthew, this is probably going to be a great time to launch.
Yeah, there's one question, Andrew, that one question that might be good to get your perspective on,
Sure.
Which is, if you think about this life cycle, where do you think automation has the greatest impact and or ROI, if those are mutually exclusive?
Well, okay, that's a great question. So what would I prioritize? So first of all, everything here, almost everything in this process is available for some uplift or complete automation, some uplift in automation or complete automation. The industry as a whole had focused originally in the preparation stage because those were the tools that were widely available. So you had tools coming out from the tax software vendors, right? So that was, and then you had companies like SurePrep that were in the preparation stage, and you had OCR, whether that was from whatever vendor logo that might be, optical character recognition, to be able to pull data out of the documents that you have and recognize the work papers, et cetera. That was really beat up. So I think if you're a firm, you should already have something automated in that area because that stuff's been around a long time. Back-end delivery So to me, the back end delivery for the last 5 years has been in a position where you should have been able to automate that with something like SafeSend. There are a few other products out there now. For a long time, we're kind of the category king where there weren't a lot of competitive products. You may have been using something like eSign or secure file delivery or email attachments or portal or whatever, but those were just doing a task. They weren't actually solving the workflow problem, which is where you really get the return on investment of time, right? Automating the last mile reduces your internal labor for your staff. Look, we have a staffing shortage out there. So being able to automate tasks that admins in particular are doing in that back-end process of assembly and delivering returns, reducing any paper costs, reducing any labor and time costs, moving those admins into more client-centric, client service-facing positions will increase your retention. It will allow not to have burnout, which is what I mean by retention, and it should uplift your firm's value to your clients. And your firm is interacting with those tax returns when they receive them, and you need a really seamless process to get it all done in one shot. And I think there's a huge return on investment on that. And we actually have a slide that we'll go through. Now, if you've already done that, it's a no-brainer to turn to the gather side. I don't think that your firm could have done anything that was really meaningful from an ROI perspective or true automation around the gather problem until literally the last year. Like, I think 2024, maybe the end of 23, there started to emerge solutions that can actually give you some real value there. And they're only going to get better as time goes forward. So if you haven't solved the back end last mile, doesn't have to be SafeSend. Just look at automating that. You look at solutions that do that task in like a whole picture. You just don't want to. You don't want to have, for example, you don't want to deliver your tax returns for a portal, have a e-sign solution for electronic signatures, have something else for K1 distribution, have something else for sending out X, Y, and Z documents. You want something that'll do all of it, and then you want to look and see, hey, do I have a, not picking on ShareFile, they're just a logo that people know. Hey, do I have a ShareFile system that's doing secure file transfer? But yet SafeSend, for example, gives us that as part of it. Why do I need to pay for ShareFile? Well, what if I have DocuSign? But DocuSign obviously is a much more robust electronic signature product than SafeSend e-signatures. But at the same time, SafeSend is tailored towards the workflows around your e-sign scenarios. So we've had lots of firms that have canceled their $90,000 DocuSign contract because SafeSend was good enough. And we allow firms to use the electronic signature module across all of their documents in different departments. So I would start right there, not just because it's SafeSend, but because I see the intrinsic value in return of investment and time on the back end. And it's also part of the client experience. If you've already done that, no-brainer to turn to Gather. I think I answered that question, Matthew. We'll get into some of the budget areas around that, I think, in a later slide.
That's right. That's great.
Okay, I think we should launch our first poll.
Okay, here's our first polling question. Who is responsible for leading firm technology decisions at your company? And the options are an individual within the firm, for example, a partner or CIO, a technology committee or group. We rely on an association's recommendations, such as BDO or Boomer or something like that. Or there isn't anyone, it's just me. So pick the answer that is most aligned with your experience in your firm, and we will share the results.
Yeah, I think Matthew and I were talking about this before the webcast today, and one of the most important decisions you can make, and this is about your technology, but also around the budget and identifying what that really means, the cost savings. Who's going to do it? It's surprising we talk to firms and somebody says, hey, it's just me that's doing it today. And look, if you're a small firm and it's you, then you probably need to be working with an association or a consultant or somebody that has some experience doing that. If you're a little larger firm, 2 people is perfect. If you're a bigger firm, you'll need a committee. But you've got to have somebody with ownership of this entire problem, because we'll go through a few of the things that you need to do before you even get to a point where you can buy a technology. We see a lot of firms buy technology that doesn't work out because they hadn't really identified the people that were going to investigate the problem to begin with and such. So anyway, I'd be curious to see the answers to today's polling question.
Yeah, it looks like, Andrew, I'm just looking at it looks like about a 60-40 split of firms who either have an individual or a committee, and then about 40% who, there isn't someone specifically assigned, or it's just them. And I think your guidance around, if you're in that latter category, realistically, it's probably advantageous and frankly, like, required to really lean on an association's recommendations, just given the pace of change in terms of technology now in the industry, which may not have been the case 5-10 years ago.
If you have the resources to assign internal people to really go through a proper strategy and process to identify your workflows, what you're trying to automate, what the priority is, what's important but not a priority right now, what technology you use today, what's out there. I mean, it becomes this big task, right? So if that's just me, I'm sitting back going, I could probably do this for one technology I need, but I don't know I can do this to automate the entire process, like the tax automation process across multiple technologies. And, to Matthew's recommendation too, I think you have to find somebody from the outside that's very familiar with this to help give you some guidance. Okay, want to move to polling the next? I believe we have another polling question.
Yeah, we have 3 back-to-back here. So here's our second question. What processes within your firm have been mapped? And the options are all core processes across the tax lifecycle, or a few processes, for example, return assembly and delivery, or we have not formally mapped out our processes. So again, pick the one that most likely applies to your situation. And also, let me just mention here quickly, if you have any trouble answering the questions on screen, sometimes depending on the device you're using to watch this, it doesn't let you do the questions properly. You can always post your answer in the Ask a Question box, and we'll record it there.
Perfect. And I'm not seeing those results, Matthew. So when they come in, if you wouldn't mind going over them, that'd be great.
Yeah, so really interesting. It's about a quarter of firms have all core processes mapped that have a few processes, and then a little less than half that actually haven't mapped out their processes at all, at least not formally.
Congratulations to the 25% that has. That's a big task to undertake, and it's the foundational level of anything, any decision you're going to make. You have to understand your processes as the foundation. I mean, if you're building a house, foundation is the dirt work and foundation, the most important things to get the project started. So for those that have done a little bit's not bad, because hopefully you've done that work in an area that you're focused on automating, and you could take that task in segments. And we're going to look at this process. We're going to figure out the workflows, because that's our priority to automate, and we have to start there. And for those that you haven't at all, that would be my recommendation is, pick something that you want to automate as a priority. And, maybe you make a list of 10 areas that you want to automate over the next X number of years. And today we're going to start with delivery in the tax process, or gathering in the tax process. And so to do that, the first step is understanding how that process works and mapping it out. And so, yeah, that's great that 25% is there, and we have a mix of firms that have done partials. And for the ones that haven't, you just have to find your priority area and start there. Again, if it's just you, I get it. Like, the time is hard. So again, lean on an alliance or a consultant out there. I think we're ready for the next poll.
We are. This is the third question. Which of these problems are top priority for automation to address? And the options include staffing shortage, reduce manual tasks, improve the client experience, simplify the tech stack, and reduce costs. So pick whichever, I don't know if you can pick more than one here or not, but pick the one or ones that you think are the top priority. And sorry about my dog barking in the background.
I was hoping it wasn't my dog, so.
Okay, yeah, it looks like you can only pick one. So pick the one that's top priority for you and then submit that.
I'll give folks another couple of seconds and then read out the key findings. But I think what we're seeing early on is really the big one is around top priority being reducing manual tasks. So about 50% say that's really the top priority. And then the next two are really sort of equal in terms of importance, which is around improving the client experience as well as reducing costs, which is, interlinked with manual tasks, but again, sort of equal importance to client experience.
It's the right answer, because by reducing manual tasks, you're going to get the effect of dealing with the staffing shortage, improving the client experience, and reducing costs. Simplifying tech stack is a little bit of a different piece of that, but I think if you're reducing manual tasks, inherently you're going to affect the staffing shortage issue, improve client experience, and reduce costs. So it's a great place to start, and I agree with that priority. All right, Matthew, you want to take us through a few of the next slides?
Yeah, absolutely. And by the way, just two things for context for folks. So one, part of the reason that we did these three polls up front is I think it'll help us tailor some of the discussion in the remainder of the time that we have. And then in case you want to see the results, we will be sending those out along with the material. So you will get a copy of just sort of, where others stand on these same questions. So again, a lot of our conversation today will obviously rightly focus on the role of automation in budgeting and cost reduction. I think this slide is important to recognize, yes, that is obviously going to be a critical piece. However, it's broader than that. There's budget and efficiency. We sort of think about it in three big buckets that we'll go through. One is around direct savings that automation drives. So think about it like reducing temp staff or over required, or cutting out paper-based costs or overlapping tools, as Andrew had referenced earlier. There's also a lot of indirect savings, which sometimes can be a little bit tougher to quantify, around like improving staff retention, focusing on higher value activities, or increasing your mix of billable hours. And then frankly, an important last one, which happy to touch on in a little bit more detail, is around better financial predictability. And I think what we mean by that is, if I think about my time in professional services, and probably many of you on this call can relate, it was in staff utilization, whether that's at a partner or staff level or admin level. You're always trying to say, how do I get the best utilization out of the people that I have in place? A lot of times automation, and in particular, given some of the, pricing models that we see today, a lot of times those pricing models are linked to sort of your firm revenue. So that a lot of times they'll be linked on a, either percentage of revenue or increasingly like on a cost per return. And so there's actually a really nice predictability, which I think is just a lot easier to manage than having to think about, am I at 58 or 72% utilization for X or Y staff? And so I think that's a really critical component as you're thinking about particularly your long-term budgeting, is that sort of like confidence in, hey, this is how my business is going to evolve as I see fluctuations in my client mix or in the growth of the firm. Anything you'd add on just the?
No, I think you covered it well, Matthew. And I mean, it is tax automation is more than just improved budgeting, but if you do it right, you get all the benefits. And then we'll try to give you some abilities to calculate that. You want to go to the next slide?
Yeah. Yeah. And the other two that I was just going to mention that we'll touch on is like, and, I think this was reflected in what people are trying to solve via automation is client experience. Like the reality is automation just delivers a faster, more efficient, less frustrating experience for your clients. I mean, you think about the amount of effort, things of the front end, the first mile around like collecting source documents and all the work not only the firm has to do, but clients have to do in terms of finding source documents, identifying which ones they have or haven't provided, tracking down K1s. Like that's a very arduous process. Similarly, for firms that might still be employing a paper-based return delivery process. And then the last is around sort of firm perception, right? Which is, and we'll touch on this a little bit later, which is just fundamentally client behavior has changed since COVID and people have a different set of expectations. And increased use of automation gives you a real competitive edge, right? It presents you as more modern and tech forward than many of your peers.
Yeah.
So
I was going to add.
Yeah.
I was just going to add like super quickly on this. What's inevitably going to happen is that as your clients interact with more remote digital processes from other areas of their life, whether that's banking, their wealth manager, their health insurance, attorney, state plan, whatever that umbrella is, they're going to have a worse experience and potentially a better experience than how they're interacting with you. And what you don't want to be is on the list of the worst experience. And, you'll inevitably have clients who, and this has happened to me in my personal life multiple times, where I have an experience and like I had something the other day where I couldn't e-sign the document, not because of regulatory, not because of legality. The group I was working with just didn't have an ability to send me the document through e-sign. And I'm traveling. And that point of frustration, I just quit interacting with that group because everybody should have an e-sign solution by now. And as a person that's busy, it frustrated me. So you don't want to be on that end of the experience. Where on the other end, I've had experiences where I thought, wow, what a lovely process I just went through to get this accomplished. And that's the brand that you want to have. And so inevitably, I just think every client is going to have that experience, and it's where you stack in those lists of experiences that's so important today.
That's right. So with that, we'll transition to one more polling question that I think we'll have some discussion around in terms of what the top sort of budgeting issue is you're trying to overcome.
Okay, this is our next question. What is the top automation budget challenge that you need to address? And your answer options are upfront cost of the solution, making a long-term financial commitment, costs don't align with the firm cash flow or seasonality, convincing others in the firm of the value or the ROI, or business uncertainty. So pick the answer that is most in tune with your situation. Okay, and we'll share those results with our audience.
Yeah, it's actually really interesting. I think what we're seeing is pretty even distribution actually across the reasons. Probably the biggest one is around sort of the upfront cost of the solution, but then pretty consistent around the others also being real factors as you think about adoption of automation and things that you need to get your arms around to feel confident in the decision. Andrew, like I'm curious because we'll talk about it in a couple of different areas later. Like any sort of guidance to firms around how to think about the upfront costs of the solution?
Well, I mean, it's always a little bit of a shock to have to pay upfront on something that you haven't proven out yet, right? So you're sort of leaping off the edge with as much information as you've been able to gather, which is why we go back to this, pre-planning phase, and having people in the firm as a group or committee or alliance to lean on really matters. Because if you're just trying to, buy something and you see the upfront cost and the sticker, and you don't really understand what that long-term value is going to be further than what the vendors maybe just told you it's going to be, it can be pretty scary to do that. And then there's all sorts of other things that if you don't have the momentum in your firm and the buy-in to do it, then whatever you pay up front could not work out. If the training and implementation is too long and the staff's not bought in, then you could have hiccups there. And so I get all of the anxiety around it. And there are vendors from the outside of this industry too, that, not a knock on them, but they don't understand the cash flow seasonality and that, hey, let me kind of dip my toe in the water to see if I'm getting the return on investment on this before I really make the full dive, into the water. And then is it the right or wrong time of year? Seasonality plays a huge part in whether a firm's going to buy from you now or later, because that cash flow is so important to the seasonality of whether they can do it or not. And so I think vendors need to do a better job of understanding that there's a proving point to get people comfortable that what they're buying isn't going to be the sticker shock that they're not going to see the return on, and kind of move them slowly into where the seasonality works to take the leap. It's really, like I said, just the lead up of the education and the research you've done and the diligence on it and the willingness for the vendor to work with you. Like, I'd ask the vendor to work with you too. Hey, this is sticker shock to me. I'd really like to find out if this is something that's going to be valuable long term, and I'd like to work around my seasonality. I don't see anything wrong with asking that question either.
Yeah, maybe a couple other thoughts on this one that, again, like we'll touch on in other areas as well. But, I think one is, I think what Andrew mentioned, which is, I think you'd be surprised at some of the financing options that, many vendors do offer. I mean, even if I think about, ourselves, and so that can be a solve. Two is, I think I would challenge people as we think about particularly the opportunity for some of these automation solutions to existing overlapping tools. A lot of times there's actually, I'm always shocked by the amount that firms are spending on some of their portals or e-sign solutions that, via the use of us, in some cases, like, you basically are able to completely sunset. And so a lot of times there's a lot more redundancy than you might expect, which reduces that upfront cost. Three is, I would really push people, and we'll talk about this as it relates to vendor selection. I'm a big proponent, and obviously it influences how we operate, but of usage-based pricing models, so that way you can dip your toe in the water, get comfortable, and grow as you feel confident in the ROI that you're getting from the solution. And then the last one that I would just mention is, I think sometimes, firms may be reluctant or underestimate their ability to actually pass on technology costs and fees to their clients. And so, obviously that's up to each firm individually, but, I think there's more latitude. All right.
Move to the next slide. I agree with all those points. And I just wouldn't be afraid to ask your vendor either. Like Matthew said, you might be surprised. For example, with SafeSend, we tried to do a small volume under usage so that you could start small and then build up so you could gain confidence, spreading out payments, things like that. There's all kinds of different ways to just talk to the vendor around those points. And I can't tell you how many firms that we'd ask them, hey, are you using an e-sign, a secure file sharing system, maybe a portal? And we just go, look, when do those contracts expire? And let's just move that money into this budget and let's do the deal at the time that those expire. So that's right. Because they were duplicate or replicative. We've got about 10 minutes left here, Matthew. So let's go ahead and get through some more content here.
Yeah, I think this one is less around, obviously automation can deliver very real savings to a firm. This example is, HonCam going from like paper-based, return, assembly and delivery of returns to obviously like a more digital automated solution. So, no surprise that obviously you're going to see a very strong ROI there. I think the more valuable call out for this group is actually what's a little bit different difficult to see on the slide, but in the follow-up, I would encourage you to look at is when they mapped out this process, which Andrew talked about the importance of earlier. What you actually will find is that, okay, in a paper-based return delivery, you'd obviously assume there's a bunch of paper-based costs you absorb. Well, the reality is of the $47 in cost to the firm, only about 19 of that was the actual paper-based, postage-based cost. $28 was actually more internal to the firm in terms of their actual underlying processes, whether it be reducing risk, reducing sort of error rates, whether it was partner time being spent on having to actually review the return, et cetera. And so that's actually, I think, a great example of the value of mapping your processes. Without that, they probably would have significantly underestimated just how much ROI was actually there for them.
Yeah, I think that's a good point. Firms tend to not understand all of the items that should be into that ROI outside of just the hard cost. There's a lot of savings in there that sometimes is missed. That's why we ended up having a firm provide what they did internally to get to that ROI point, and we've worked on that basis to try to get that out to the prospective audience for being a SafeSend customer. It's hard to find everything, and then tangibly make sure that that item is something that is going to save cost at the numbers that maybe a vendor's given you. I just flipped it to the next slide, Matthew, if you want to go through this one.
Yeah, I would just say this one is more of an example of, even on something as what might small and just sort of e-file automation. So this is an example completely unrelated to SafeSend, if I'm honest. This is a customer of ours who basically did that same sort of process mapping and understanding and said, hey, listen, I can save basically $3 per return if I create an API, or if I set up an API, automate my e-file. And that enabled them, and obviously larger firm, but that enabled them to go from a group of almost 20 people who's basically managing e-files down to a group of 3. And so they reallocated those individuals to what they would say is much higher value add activities. But again, it's something that on the outset you might say, oh, that's a nice thing. I don't know if there's ROI there. And then you look at the practical reality, and even as something as, call it 3 to 5 minutes at the tail end of the tax return process is actually hugely meaningful to you.
Absolutely. And again, having an alliance or a group of people to look at these, they can continue to take on smaller projects within that project to find examples of where they can save even more money, which is what this firm did. They just kept working on the task of automating the process.
Yeah, I think you can maybe skip this one, maybe go to the next one, which is something we alluded to, but I think this is one that I hear a lot, which is, hey, are my clients really ready to adopt automation? And I think as Andrew was mentioning earlier, the reality is COVID just fundamentally transformed consumer and client behavior. If you think about whether it's telemedicine or video communications or e-commerce, all of those saw, 3-4x increases in usage, even amongst, call it, older populations. So you look at age 55 plus across those categories of telemedicine or video communications, those saw, 35-point gains in usage that still to this day remain. And so again, going back to clients have a very different set of expectations based on how they're engaging now with other providers. And that now translates into a much greater willingness and comfort level with technology than I think we would have seen even 5 years ago, or even, many times still believe.
I'll put it more simply. All the data proves out that no matter what the excuses of why your clients won't adopt it, that they actually will, up to around a 90% threshold, no matter how unique you think your client base is, if you implement it the right way, have the strategic buildup to it, and are able to actually do the things to push that to your clients in the right way as well. I give a 10% difference because I'm not going to take my best client that I make the most money off of and push them into a situation they don't want to be in, or there are some unique cases. But in general, the data proves across the board that even when firms say that their clients can't do it because of some particular subset of client base, it just doesn't prove out in the actual data. Let's go ahead and launch the next polling question so we make sure everybody gets this polling question answered so that they'll get their CPE today. Let's go ahead and launch that.
Okay, our next question is, do you use a defined list of criteria to evaluate automation vendors? And the options are yes, and we use it when considering any vendor, or yes, but it's not used consistently, or not yet. So pick the one that applies to you and go ahead and click submit. All right, and we'll send you those results once they're all in, but it looks pretty strongly like the answer is not yet.
Yeah,
Not yet.
and I think, listen, like that's not a surprise. Listen, like my encouragement would be, it doesn't need to be a long process, but I would strongly encourage you to put together some list, right, as you start to look at automation vendors. This is, I think, our view on like, hey, if I had to pick 5 things, and obviously you're probably going to have more, like, what do I think is critical? And in my mind, there's probably 3 that I think are just must-haves and a couple that are probably nice-to-haves. The must-haves for me are, you want somebody who has a proven R&D track record as well as a compelling roadmap. What you don't want is you don't want to buy off of somebody who just has a compelling vision but doesn't have the track record. Similarly, you don't want to buy just on the existing product today. You should be thinking about buying both the existing product as well as what you expect that product to look like in 1 to 2 years. And so that combination, I think, is critically important. The next one, which I think is often overlooked, but I also think critically important, is just a commitment to an open ecosystem. What that just means is like, is it going to be is it going to be interoperable with whatever other vendors you choose to use, right? Like you don't want the equivalent of an Apple-based solution for your tech stack where it limits you to saying, hey, you have to use X prep software or you're unable to use this payment provider. You really want somebody that's committed to saying, hey, I'm going to integrate with whoever you choose to use. And then the third is really around like strong customer reference. I think there's nothing more powerful than being able to, than a firm that says, hey, listen, here's 20 different customers roughly similar to your profile, or hey, talk to anyone within this association. The nice ones to have, I think, are around like simple pricing that's aligned to the firm economics, i.e. usage-based. Like, I think that's hugely advantageous to firms. And then the last one is like tax industry focus. I think we've seen time and time again that some of the horizontal solutions, they're good for the 70%. They're not good for the 30% that's very specific to tax and accounting.
Completely agree. We are bumping up against the hour. So there's a few more slides here. This will be in the deck that everybody will get. Why consider consolidating automation providers? Look, it just reduces costs. You don't want duplicate technologies doing the same things. It makes it easier for clients to adopt. General misconceptions, we hit on this. This slide just talks about some of the things that most people believe are true that aren't. You can take a look at that. And then this is a pretty good slide of just what has to happen to realize budget benefits in automation. Because we're here at the end of the hour, I think we should just launch the last polling question. Everybody has already answered enough to get CPE, but this will be just a fun one. If you want to answer it, feel free to, and we'll conclude on that.
Okay, thank you. So our last question is, are you interested in learning more about SafeSend? And your options are yes, no, or I'm just here for the CPE credit. And I want to take a moment to thank you all for attending. And thank you to SafeSend for making this event possible and for enabling us to offer a free CPE credit to each attendee. As a reminder, you'll receive a link to your CPE certificate later today in your email. If you have any questions about CPE, you can contact me directly at gperry, Gperry, at cpapracticeadvisor.com. Also, if others are watching this event with you at the same computer and they require CPE credit, you can email me their names and email addresses. Again, that's gperry at cpapracticeadvisor.com. After this event, you're going to be presented with a post-event survey evaluation form. We'd appreciate it if you'd fill out those questions so we can continue to improve our webinar series. Thank you so much, Matthew and Andrew. And be sure to download the slides in the event resources section if you haven't done so already, so you can take those with you. And with that, our audio is going to end.
Thank you all. Appreciate all the